Alright guys, I'm back with another video. So I'm gonna talk about our favorite stocks here, right? So before I go any further, I own the stock, of course I'm biased. I'm gonna talk about GameStop in a positive light. So again, please take my whatever I said with a grain of salt. Now my cost average is higher than this. So just so you know, I own the stock and my cost average is high. Please, before you buy into this stock, do your own research and, be careful. For my point of view, of course, this stock is, my long-term investing strategy, I guess, whatever. To me, this company is doing better than it used to. With Ryan Cohen came in and make the company a little bit better. Now I have to say a little bit better. Obviously, I want it to be more profitable, right? In the net income aspect of it. Of course, they have done amazingly already, as I showed you before. So as far as the price action, though, I wanted to show you something. I think I might have shown you already before I open up, right? So in my opinion, obviously everything that you see on the stock market or whatever, it's always follow the SPY. Okay, the yellow line is the SPY, and the bar graph price action is GME. If you look at it in a 5-minute chart, if you look at it in a 15-minute chart, it's a little bit different, obviously, right? Depend on which time frame you look at. And so, the general idea is always the SPY is kind of trace, like uptick, downtick. It's kind of similar, right? So I'm not worried about, the price action and also day to day or even month to month, because I'm here for it for the long haul. Honestly, I think that this company is have been going through a lot, and the reason why I invest in this company is because it's due for a massive turnaround, right? Story that not only that you have a good kind of industry to get into, which is gaming, right? To me, gaming is a booming industry. It's going to have customer for life, right? And if you could make a company that is, for the people, by the people, no, that's a country, right? Look at how we are now. I feel like we're kind of deviated from that, but I digress. That's not about that. But what I meant is that, you have a company that is believed by retail investor for so long. And of course, like, we're here for the long run. There are some people who come here because of the short squeeze and whatever, right? But to me, it's more than that. It's much more, the story is much more near and dear to my heart, because this is how, I feel like it's all started. This is how people learn a lot more about the stock market, and like, we are becoming more and more aware of what is going on, right? And of course, there are still people still being manipulated into going into trading in and out, and all of that stuff, right? Now, I'm not saying that you cannot make money trading this stock. It's just that look, high swing, high low, high, or whatever, right? So I'm not a technical analysis person, so please forgive me. But my point is that overall, the market is doing this dumping thing, right? Now, of course, the Fed speak yesterday, and they have speak their piece already, and they have make it known that the rate is going to stay high for longer, and there's going to be more hike to go. And this is why the S&P 500 kind of dropped today. It kind of similar to what GameStop is doing as well. So I'm sure they're going to try to mimic the S&P 500 for GME. And they might drop everything down with it, along with the S&P 500. Now, I always told people close to me that if you look back to 2008, the year 2008, everything dipped down, right? Including the most profitable company, or at least the company that is doing okay. Like, they're not filing for bankruptcy, they're not in a crunch for money or anything like that. So to me, GME is one of them, right? It's one of those companies that you want to keep an eye on, even if it dips down to, $11 or whatever dollars that it's about to go down to. Now, I'm not saying that, hold on one second, let me close this because it's hard for me to do this right here. And so I'm not saying that it's going to go down to the $4. Man, if you ever see GameStop at $4, but the possibility is there. The reason why I said that is because when people are panicking, selling the S&P 500 or whatever, it's bound to happen, because the algorithm is going to trigger the downturn. And this is the opportunity of a lifetime. If you ever see it down to $4, why? Not a financial advice here, but as we have talked about it extensively, is the fact that it's going positive, right? Everything about this company is gearing up for something. Yes, there's more work needs to be done. Obviously, we're not out of the woodwork completely yet. However, they have cash on hand to mitigate whatever the risk is. And on top of that, you have the $300 million in the treasury bond. So the only way that this company is going down to the gutter is that the U.S. government is going down to the gutter as well. So, by that time, I don't think, GME price is the least of your issue. But anyway, so what I wanted to kind of tell you is this. The book value alone, meaning the shareholder equity, is at $4 right now. $4.16. So if you ever see it down to this price, around that range. And why do I draw that? It's because of the price action, the historical price action that kind of bounced, that kind of make that as a support. Okay, right here, see, it touched that price and it interact with that price for so long, and then it just fall off the cliff here, and then this is where Ryan Cohen bought in, right around this time, no? Sometime right there. And so, just be expectant of that. Just be careful. Obviously, it could interact with this price as well. I'm not saying that it's going to go down to there, but again, anything is possible. Now, the other level that I was looking at is $14, because that's the historical price action, and then also $12 right here. Now, that's just in the nutshell. People who are into technical analysis would look for stuff like that, right? And of course, also the algorithm. We are trading by the algorithm. They are, there with us for a long time, and and I think this is why, a fair market is kind of dead, because whoever have the best algorithm, they're gonna win, no matter what. They could suppress the price, they could terminate all of the buy orders and reroute it to a different type of market, so that you don't see the price action ever. And this is part of the market that we're living in right now. It should be illegal. Right now it's just tough, because I guess the SEC don't see that as a illegal thing, and there's a lot of people who stand to make billions of dollars because of this dysfunction in the market. And we know who those actors are. I don't have to tell you who. Now, I just babble a whole bunch of stuff, but I hope it makes sense. Now, let's go back to this website, because I showed you this website before. And let me enlarge it a little bit so you could see it better. All right, so again, this is a projection. I'm not saying that this is going to be, the end all and be all here. But if you look at the expectation for the stock market from what the Fed is saying today and what is happening, is that it's going to go down. So the S&P 500 is going to go down to this level right here. Again, this is just a projection from this website based on what is happening today. And so if that's the case, the dollar is going to keep going up in value. And once again, the money is going to be sucked out of the S&P 500 markets and whatnot. The reason being is that the 10-year Treasury bond has been kind of like flirting with the 5%, and the short-term Treasury bond is also flirting with close to 5.5%, right? Depends on where you buy it. Now, if you look at the GDP projection, of course, the actual one is 2.1. The projection is that it's going to increase next quarter, but it's probably too little too late, right? The market is already freaked out because of what the chairman is saying. And so, be on the lookout for that. What else? So the inflation, obviously it came up a little bit, more than the expectation. The year over year, it's still 3.7%. We want it down to 2, remember? And the interest rate is 5.5. So there you go. As far as the trade balance, we've been in the negative for more than 4 quarters there. So that is concerning, meaning like, hey, we're not doing anything much. We are in deficit right here. So that is concerning. Of course, we're losing money in the $200 billion, right, last quarter. That's good. GDP went down into the negative. That GDP, oh man. Ooh, that is steep, man. That's like for every $100 that you make, you are in debt $125. Yeah, how are you gonna get out of that debt? It's insanity. But anyway, so the conclusion for this video is that don't freak out. Don't freak out, because this company, you know what the balance sheet looks like. They are net cash positive, okay? They have more asset than liability, okay? They have some cash in the bank, obviously accruing some interest. So the higher this interest right here, the higher this interest goes, the better for GameStop, okay? Meaning that they're gonna use some of that to sustain the business. Now, if they only lose $2 million last quarter, then I wouldn't worry about it. You know, even if the S&P 500 dropped down to the level of $400 a share, okay? So, again, the opportunity is when it goes down to $4, or $11 or whatever price point that is less than $22. Remember, Ryan Cohen bought it right here, bought around here. Okay, around up in the 20s. So and of course some more insider bought over here too, so around $17 right there. So again, if the insider are buying at this level, imagine if it goes down to here, right? And keep in mind as well, GameStop still have $100 million worth of stock buyback, setting aside for events like this. They could, start to scoop up some shares of their company back using whatever they have in the company right now, right? To me, I'm sure it's not a smart thing to do, because again, you might need that $100 million to go further into the future for something else. So yeah, that's all I have. Just stay vigilant, and hey, this is an opportunity. So okay,